Getting right to today's market action and the action for the whole week. We have Ken Mahoney of Mahoney Asset Management. He's here to tell us the number one thing he's telling his clients to buy right now. And Mark Lucchini of Janney Montgomery is here to give us 3 hot stocks that you should buy right now as well. Gentlemen, good to see you. Oh, there we go. We do have Scott Bowers. Scott Bowers at the CME. Scott, let's start by talking about the VIX, because a lot of people say yes, it is too low when you consider all of the problems in the world, problems coming up with earnings. Perhaps now is the time to hedge some of the volatility by buying in. Of course, you can't buy the VIX, but you can buy VXX. What do you think of that play?
Well, there's no question about it. I mean, you guys know I harp on this all the time. When we've seen the VIX get down to these levels over the last 6-9 months or so, I always come in here and say, stay long the market and buy your protection. You got to do the same thing right now. It is just too low. And I'm not saying that we're going to get a market correction here anytime imminently, but there's so much going on, like you just said, in the world. We have earnings coming up right now. Why not buy this cheap protection that is at absolute historical lows and just stay long in the market through earnings? There's no reason not to do that. I can't harp on that enough. We're asking, what do traders think of it? Traders here think it is absolutely ridiculous, and every person I know of is staying long this market and buying protection because it's just too cheap not to.
Right. Don't fight the tape.
I know. The tape is saying that we're going higher. And it really is, and that's what is, the contrarian belief here is the tape is saying it's going higher. But it's almost like you went to go get car insurance, and your car insurance, your agent tells you, you know what, we're going to give you the next 9 months for half of what you were paying.
Right? Why not?
Okay.
Why not? So wait, let me jump in here because Mark Lucchini is watching a market that grinds higher. That's the term that you're using, Mark. And as it grinds higher, you wonder about overall earnings, whether they'll be negative. But do you agree with Scott that you can't not be in this market, at least in some way, shape, or form?
Well, I do, and I think the market continues to climb a wall of worry. I mean, we know earnings season is not going to be particularly good. Obviously, we have influences from whether it's the weather or the port strike, and certainly the strength of the dollar, which is up 9% in the first quarter alone, are all going to collectively conspire to be a headwind to earnings reports. But I think investors are seeing through that, plus they're continuing to ride the wave of liquidity that the Fed promises by continuing to defer when that rate hike is likely to happen. So as a consequence, I think you do need to stay long equities. Unlike operating with the hedge using the VIX, we suggest dividend-paying equities are the better choice for most investors to ride through the potential volatility.
Ken Mahoney, not only is the VIX very low, but oil is still pretty low. I mean, when you look at it historically speaking, it was up a little bit today, almost 2%, which I say is a little. Usually we have these swings of 4 and 5 and 6%. It was up. I'm wondering if the oil sell-off is over. What do you think?
I don't think so. I mean, any asset class, any sector that sells off violently like that, you generally get a little bounce. You get maybe a short cover rally, you get a counter trend rally, and go back to retest, which we're doing now. If you look at the fundamentals, though, supply and demand of oil, we're still calling for lower oil prices here. So I wouldn't be nibbling yet. I'd be waiting to a time where in any sector, you throw the baby out with the bathwater. And we're not there yet. I mean, the baby's still kind of hanging out a little bit. So we're not there yet. We still call for lower numbers in oil, and we think we're going to see that in the coming weeks.
Stoic. That's Scott. He's stoic when all those people are screaming and panicking behind him. What are they yelling about, Scott?
Yes, I like that idea.
You know what? There actually was a big buy order that just came in, and traders that have been long today, they're just getting out of some of their positions, maybe flatten out going into the weekend, which is a great thing to do given all the earnings coming up next week. You never know what can happen over the weekend.
And given that we're hitting, and not just in the United States, but we're hitting globally a lot of highs, whether it's the DAX in Germany, we're seeing historic highs at the Hang Seng in Hong Kong, right?
Yeah, I mean, one thing we're looking at, too, I'm sorry that you said the best protection is the VIX, because if you look at your timeline, May 12th is coming up. That's when Greece is supposed to make that double payment. Now, there's been a lot of fuzzy math around Greece, and you want to get, like I said, earnings are coming up. You start looking at the timeline. Greece is coming up. You want to buy the volatility. You want to buy VXX, the sister to VIX.
Well, there are 2 votes for VXX. Mark, you want to make it 3? And before you say on VXX, we are definitely, I think it's pretty sure thing that we're going into a pretty negative earnings season. Given that scenario, don't you think a little VXX would be wise?
Well, that's one way to approach it, David. Ours is to take a position in dividend-paying stocks. A company like McDonald's, for instance, with a 3.5% dividend yield. We were buyers last fall of General Electric, of course, which is launched today on the news
by the way, let me just give you kudos for that. Did you know that a huge stock buyback was coming down the line? Because that was probably, let's put up GE so you can see that 11% gain that GE had today. That's really what led to the majority of the gain.
No doubt about it. And we didn't know that. But what we did know was that Jeff Immelt was working feverishly on his legacy. And one of the things that he had promised to do was continue to unwind the amount that finance plays in its role, GE Capital, in the role of GE, the conglomerate. So that work down of selling off the finance business, the appliance businesses, as well as this real estate portfolio collectively is unlocking the cash to allow for not only this buyback, for them to continue to raise the dividend going forward. We thought that would be enough to have increased sponsorship in the stock, let alone today's announcement.
Congrats on that move, by the way.
That's a good one. Ken,
thank you.
What's your best move looking ahead? Is there a sector that you're in love with right now?
Well, I'm in love with biotechs, but we have to wait for pullbacks.
Yeah.
I mean, we were looking at PBEs, one of the ETFs that we like. And the reason why, biotechs don't get caught up in the macro. They don't get caught up with the stronger dollar, the euro. It's more bottoms up. And there's a lot of exciting things that are happening in the biotechnology space due to the human genome studies and so forth. And these biotechs are really being like a farm system to the big pharmaceutical companies that want to buy them in late stages, phases. So we really like the biotech. Again, you have to be patient, though. You have to buy the pullbacks. A couple weeks ago, we had a nasty pullback. That's probably a good time to buy it. So we really like biotechnology here, away from the headlines and away from the dollar strengthening and so forth.
Away from the screaming at the CME. Let Scott Bauer handle that.
I love that sound in the background.
Great to see all of you. Ken Mahoney, Mark Luchini,
Thanks, Liz.
and Scott Bauer. Have a good weekend. Thanks, guys.
All right. Well, we were